Welcome to Insights. I'm Eric. I'd like to do an open review here and talk about the U.S. economy. I'm not going to talk about in terms of GDP and percentage, nominal percentages, but rather the direction, which I find to be far more reliable as an indicator of economic growth or expansion. The EAC, which is defined inside the blog, you can look it up under, it either is in the matrix tab or the Q&A tab. It's a marginal, it's a monthly time series that's predominantly updated by real-time market series or US release data that's unrevised, which is important since a lot of data in the US is revised and adjusted by statistical techniques that make it relatively unreliable. This one isn't modified much, and from it we can get a very good idea of the economic direction. The red boxes here define bear phases, and you can pull this chart from the matrix in the cloud and keep an eye on it. We're at an important juncture here. Either the economy is flipping upwards as we select bull, it shows the bull phases, and then the bull phases correspond to rising stock prices and generally weak weak gold prices, or it's going to flip back down again and we're going to lose the red box or regain the red box in the bear phase. It's difficult to know you're just going to have to watch this. If you take your opinion out of it, don't watch the headlines. This is far more reliable than the headlines. We are due for an economic bounce. The problem is that the bounce may take a while, especially if the conditions within the backdrop and restrictions within the virus and things don't open up quickly or open up to the same level, and we can't kick out the debt-fueled stimulus indefinitely. We could slip easily back into an economic contraction, of which this red box would continue. It's something that you should just watch and probably not listen to what I think or even what you think. The computer will just kind of spit it out, and I think you should gain your interpretation from its direction. This next chart, which is also accessible within the matrix, includes the same information, except this one has the intermediate trend oscillator, which is this blue line. This tends to move faster than the long-term oscillator. And what you can see is even though we broke above zero with the long-term oscillator, the intermediate one is already starting to fall again. What will happen is this will break below zero if it continues, and it'll pull down the long-term oscillator eventually. So the economic expansion that everyone's so highly touting it's there, it's weak, and it might not hang in there. The intermediate is already starting to break down, which means we could be back into economic contraction phase. Inside subscribers matrix, you have the EAC tab, which is not that, but it's right here. You can look at the components of the model. I'm not going to talk about them other than the EAC. You can read this number. There's a number of bull cases, a number of bear cycles, the average monthly counts for them. So you get an idea of where the bull phase, if it holds, how long it's going to last. If it fails again, you're going to probably have a bear cycle that averages around 17 months or so. Could be shorter, but it could also be intense if you get a similar double dip recession like 1980. But this is something that I would keep an eye on inside the matrix and watch. If I pull up a version of a matrix, and I'm not sure which one this has, this might be the one we were using, the silver, but we pull down here. It's under here in the US economy box, and you can find all this stuff that's in there. I would use it, and I would click these charts in order to keep an eye on this. If this slips back down, all the prospects that we have for an economic expansion are going to evaporate very quickly. So that's the economic setup for the United States. It's not as strong as it looks, and it's a continuing conversation that we must monitor. Subscribers should monitor it by following the matrix. The matrix is updated every day. Even though that's a monthly time series, this will get, whenever the data within it gets refreshed, it'll get published, and it's something to keep an eye on. For red box forms, I would be cautious about another continuing of the economic contraction. It could last as long as 2022. If you have any other questions about the EAC or anything else in the matrix, contact me directly through the blog, or make some comments under the video. I'm going to leave this one open for everyone to take a peek at. See that there's a lot of information inside the matrix outside just specific markets and assets. The economy is just one aspect of that. There's others, but we will talk about them later. Thanks for watching the video and have a nice day.